Welcome to the Accounting Profits and Prosperity Show. I am your host, Louis Prosperi. Today we have the world-renowned author, speaker, and coach whose focus is in the accounting and legal sectors. Please welcome our guest, Heather Townsend. Hi, Heather. Welcome to the show.
Thanks very much, Louis. I'm really pleased to be here, and thank you for asking me.
We are thrilled to have you here today. One of the things that I want to talk to you about is something that impacts a lot of accounting and bookkeeping firms is readying their firm or their practice. Could you explain, first of all, what that means and what they should do if they want to have that implemented in their firm?
And I think the first thing I'm going to do is pick up on the word should. There's no should about this. And the first thing we have to remember with a future-ready firm is it's your firm. You do it your way. And that's part of the issue is there's far, far too many people going, you should do it this way. You must do it that way. You're a loser if you do it that way. So the first thing is to have a future-ready practice. It's got to really, really be aligned to who you are and what you stand for. Because the worst thing you can do is go 5-10 years into your journey to run a practice, get it to a certain amount, and then again, don't want to do this anymore. and future ready has got to be it suits you first and the life stages that you want to take it through and in. You know what? If you want to get to the age of 40 and sell up and live on a beach, be my guest. That's still future ready. But what does that mean for you? And far too often we think about what tech should I be using? Should I bring in younger clients? No. Having a practice that is ready for the future has got to start with, does this align what I want as an owner? So let's assume it does. The next thing we have to look at is sustainability. I'm not talking about tech here. I'm talking about it's so easy to kind of go, let's grow, let's scale, and then you go 5 steps forward and then you fall off a massive cliff because you've ignored a few things, and then you go back, not just 5 places, but 6 places, but 7 places, so you right size your revenue stream so that your employees match up. Done a couple of those recently. So the thing is about future ready, it's about who am I, what do I want, and then it's about how do I sustainably grow. So what do I mean by that? A lot of people think that growth is, hey, Louis, I'm going to win lots of new clients. Brilliant. Right. But there's a limiting factor here, is that, Louis, you run out of time. I know you're great. I know you're amazing. I know you're a superhero, but even you still run out of time. And a lot of people think that growing and scaling just means win more business. And actually, there's 4 key ingredients that you've got to really look after to have sustainable growth.
Right.
And that, of course, is cash. And I think we're preaching to the converted here. So why is it that sometimes accountants are the worst people and bookkeepers are the worst people I know for their own cash flow?
No, you're true. You're not wrong. It's funny, but it's true. It's true.
And you look at, and I know there's a lot of differences around the world, and I know that if you've got a lot of audience in the US, they're a little bit behind where maybe we are in the UK, where Australia, New Zealand is, where those really happening future ready firms that are the tiny firms that we're talking about. We're not talking about mid-tier or strong regional. We're talking about, those people that are in dollar terms that are sort of $60,000 revenue up to about $1.5 million revenue. What they've successfully done is they've built a business model based around recurring income that doesn't get paid on completion. It gets paid every single month. And so actually, when it comes to cash flow, getting that, we call it direct debits. I can't remember the US phrase for the equivalent of direct debits, but it's ACH, something like that. But it's where you commit to pay me every month and there's a lovely little bank transfer that just happens. And you divide your annual fees into 12 and it just gets paid like that. So cash flow is the biggest thing. Then it's about your time. Because as I said, Louis, you're a superhero, you're amazing, but you still only have the same 24 hours in the day. And we sort of forget that. And we go, I'm going to win more clients, I'm going to win more clients, I'm going to win more clients. And then you're like, I can't look after these clients because I don't have any more time. And because I haven't brought the team up behind me, they can't do the bit I do. They can take a bit off me. And now I'm working long hours, most weekends, and I'm tired, and so client service suffers. So we have a bit of churn, the client referrals, then they dry up. And so we have to remember that we have to guard our time. What are we there to do? What's it there for?
Right.
Then we've got to look at systems and processes, because you only have to look around the world to realize that every single country I've spoken in talks about a talent shortage and how salaries of good qualifieds seem to be going up exponentially.
Yes. Yes. That's everywhere.
That's everywhere. So, what is our system? What is our process so that we can get a good job out the door in an efficient way every single day of the week? So, we've looked at our time, we've looked at the systems of process, cash flow, and the last one is the capacity. Do I have the capacity in the firm, both now and for the medium term, to deliver? Because I don't know whether you've seen this, Chloe, and I'll put this out now. I've worked with accountants for the last 20 years. I love the darlings and bookkeepers. Doesn't matter whether they're a tax advisor, CPA, fractional
Right.
CFO. I love the darlings. But what often happens is, how do I put it this way? We're attuned to overheads. I've never seen a collective industry like it. The red pen comes out, it's always red, isn't it? Comes out and swipes out. And if you're really in with the accountants, you print the spreadsheet out. You don't just look at it on the screen. You sprint it out, you get that highlighter out and you scrub out overheads. And there's that kind of mentality that sits in the profession. As a result, a lot of people don't invest in a head. You tell your clients to invest in a head, but you don't. You run your practice too leanly, and then you wonder why you're screaming out for a new person to join you. And a smart aleck like me says, well, you've got to find them. That's difficult. Then
Sure.
they've got a notice period to work through in the UK. If it's qualified, you probably took in 3 months. So then they've got to get up to speed. You're 6 months behind where you need to be. And then I get told that I'm not very nice. And so, to get that future ready, we're looking at the alignment with you. We're then looking at the sustainability around those four key ingredients. And yeah, the obvious comes of what's your plan? Are you working on the plan? Blah, 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 blah. I'm a coach. I've got to say, have you got a plan? If I
No,
don't
no.
expect...
This is music to my ears. It's like I'm listening to myself over and over again. This is
Yeah.
great. I love it. I
So
can't stop smiling because it's really good. It's
yeah.
refreshing.
Yeah, absolutely. I must not be so flippant about the audience that I love. But anyway, the next thing is you then kind of go to me, Heather, what does future focused, future ready actually mean? And that's the point where you do now need to look at the medium and long term.
Right.
When I started working with accountants 20 years ago, the partners in the firm, BDO, top 5 practice in the UK, fairly decent practice in the US,
Mhm.
turned around to me and said, compliance is dead. 20 years has gone by. Nope. If
Where?
anything,
Yeah.
what I'm seeing around the world with the advent of big data, with the advent of the tax authorities knowing how to use big data, which I think is really important, that we're moving from that every so often reporting into far more of a thinking about every what's the word for it? Real time reporting. For
Yeah.
example, if you go to Belgium, if you raise an invoice in Belgium, you've digitally got to inform the tax authorities that you've raised that invoice. They already are starting to track you for that bit of sales tax that you've just raised on that invoice. So, we're moving from the, hey, let's
Yeah.
take a bit of a disk to my accountant, download the data. We've moved from that to that in 20 years. So compliance is not dead, far from it. So there is a good living to be had with day-to-day compliance. But there are gurus around the world, aren't they, Louis, that go, no, 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 but that's not sexy. You know what? Some of our most profitable practices in the Accountants Growth Club don't want the big clients. They want the day-to-day normal stuff that they can churn through really, really well. So we still need to look at that midterm. And let's cast back 20 years. Zero wasn't around there. Now I know the big kind of software in the US is QuickBooks. QuickBooks switched on its cloud version in response to the Zeros of this world coming on board. So we've gone through in the last 20 years big shifts around cloud accounting, social media. I absolutely think we're at another shift now. And like any shift, it's hyped far too much. And
Right.
I think we are seeing AI come in. I look, we've had about a year of ChatGPT just going, whoo. And, in that last year, I don't know about you, Louis, but are you finding that everything is, and it's got AI?
Oh
Might not
no.
be good
Yeah.
at AI.
I got to be honest with you. Every new program has incorporated an AI function. It's hard not to if it's
That-
not in there, it's going to be there in the next 6 months. Like,
yeah,
yeah, if your program doesn't have AI yet, it's going to have it, right? I agree. It's
and
definitely in everything we do now. Yeah,
and you know, quietly in the background, particularly the real, people pushing cloud, doing it very well. The QuickBooks, the Zeros, the Dex, those real people pushing forward. They've been quietly building up huge expertise in machine learning.
yeah,
As a result, we don't think twice when we write an invoice and it automatically codes it for us in the right place. That's machine learning. But I
yeah,
think in the last year with ChatGPT breaking through, we went from me trying AI tools and go, bleh, all hype. It's taking me longer to review this, to actually one of the most amazing tools out there. And I think future ready is about really thinking about, and I know we've had all these caveats, and I'm just going to kind of go on to probably what you really wanted me to answer. Future ready, I think, is about understanding that the day to day accounting is probably not now going to be done by accountants. So, what are the skill sets that we really need going forward? For a long time, the job of an accountant, particularly in this cloud based era, has been less about accounting, more about getting streams of data to talk to each other and match up in a time efficient way.
right,
Um, and we're now, I think, starting to move into the next bit. We've got one member of our club who's she deals with cross jurisdictional tax. So she's got a team in the country that she's born in South American country, and she's over here. So she's built a custom chat GBT, so a custom GBT for her South. I know. I need to put my teeth back in. So for her South American team, instead of them using Google Translate, they now put it through her own custom GPT. So all the emails sound as if they're by my client with really good quality English.
right,
She's also built the business development script of the questions that need to be asked based on what responses they get from her junior business development person based out in the South American country. And these are ways that, and I think these sorts of things is how we really need to be using AI more. And yeah, it's brilliant for content ideation. It's been brilliant for copywriting.
sure.
Absolutely. But it's, for me, the next stage with AI is going to force accountants to think, hang on a minute, the skills I need now is about communication. It's about client service. It's less about, can I make that knotty problem reconcile?
Well, interestingly, the fact that you said that, um, it's always been about customer service.
Yes.
It's always been about communication because the thing is, our focus has always been on the other one you just talked about, right?
Mm,
And when we try to hire someone, one of the things that I've found when we try to hire someone, we try to hire someone that's good on the processes and systems, but also is great with customer care and great with communication. A lot of other organizations have different people doing those things,
yeah.
right?
Yeah.
To be quite honest, right? They don't have one person, which is their staff accountant, who is brilliant at all five of those items, right? And then we wonder why we have trouble finding those people, right? So
Yeah.
I agree with you. I think the fact that AI has helped us understand that maybe the lower end stuff, if it's done by, it's automated, like the bank reconciliations, like coding and so forth. But now what we need is the skill set's going to change from actually doing it to making sure it's correct, right? Because that's the
Yes.
biggest
Yes.
issue now with
Yes.
our teams is we got very good at people being proficient at doing ABCD, but the problem is they know what ABCD is. They don't know
Mm,
how it works or what happens. And the skill set that we're missing now is what happens if B was missing? How do you know at the end if B wasn't done,
yeah.
right?
Yeah.
So
It's
that skill set is something that is not out there, and that's a tough one to find right now.
and it's really interesting. Someone said to me, AI is the average of the average.
Right.
Clients aren't wanting to buy the average of the average. And a really interesting thing. So I was talking to an independent network of lawyers and accountants, and I said, well, what's going to make us change? And it's not the managing partner banging his hand on the desk going da 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 da.
Sure.
I said, it's clients going to make us change. I said, this was how I hired our previous accountant. So I'm your classic, probably quite a bit of a catch. I like to think that for any small business accountant, we're at that kind of revenue where we need more than compliance, where there's a bit of interesting tax work. We are multi-jurisdictional. We are, shall we say, a bit of a plum, client to have.
Right.
And how did I find this client? Well, the first thing was I met them online. We were a virtual remote business.
Right.
So as it happens, they live 15 minutes down the road, but that is complete accident by the design. This is only the second accountant out of 6 I've had that have lived on my doorstep. I don't
Yep.
look for them to live on my doorstep. The second thing I am tired of training my accountants on the latest cloud bit of technology.
Right.
And so I wanted somebody that I wouldn't have to explain the cloud to, and we use this and you need to use that. So I was looking for somebody that really got that stuff. And the other thing I really wanted was somebody I could talk to. I know
Right.
that sounds a bit weird, but it's lonely. And as a result, that's how I found my accountant. They had similar values. They were living their business life kind of a little bit like me. So they got the world I was in. And this is I think one of the biggest drivers of change for us as accountants is I'd like to say I'm millennium, but I think my hair gives it away that I'm not a millennial. I'd like to even say I'm Gen Y, but not really. But I am well ahead of my time with my adoption of technology. I often train the accountants on which bit of software they should be using.
Yes.
I'm always the one going, hey, to my accountant, have you used this? Can we try it? And
Yes.
we just have to remember that's who I am. But I am very symbolic of the new breed of clients that are coming through. You just have to have one internet search and you realize that this can be done this way. So why am I paying my accountant for that? And
Well, you're not wrong on the uh, the thing with a lot of our customers is they don't know what we know,
yes.
and they're so used to push a button and it's instant,
Yeah.
right?
Oh, yeah.
So
We're getting that push a button instant generation coming through. I got no
so
time to
they're going to
waste.
value our services like
Yeah.
that. So
Yeah.
basically, when we charge for a compliance service or a reconciliation,
Yeah.
they're thinking that that's an instant function, right?
Yeah.
So we have one of the things, my biggest pet peeves is talking in time segments related to our services and our value, because
Yeah.
that means that when we charge based on time, and time no longer means anything to anybody in the now world, we have to change the value perspective. So one of the issues that I always have a problem with, Heather, is how do we get our professionals to understand that value is not tied into time?
And this is a really interesting question because one of the most successful accountants I know still bills on time. And how does he is a sole practitioner? It's me, myself, and I. There's not a team of people. It's a true sole practitioner. And he bills. He's over $500,000 in annual revenue. However, he's very specialist. He does the naughtiest of naughty exam-based problems. And what he's brilliant at is billing by value. He
Right.
tells them that he will still clock up the amount of time and he still kind of edits the bill and will write some of that time off, but he still looks at it that way. However, the key difference is he's selling them the value. So right up front, he's saying it's going to cost you this, this, and this, but I'm going to save you this amount. The problem is we haven't anchored our value. And it's fine. If I do a bit of inheritance tax planning, so I don't know whether you have the equivalent wherever listeners are using, but around the world. But here in the UK, if I die, I'm going to have assets that I pass to my people that
Right.
inherit off me. Government likes to take 40% of that over here, bastards. So there's a lot of work around that kind of stuff.
Sure.
So if you're doing inheritance tax planning or any kind of tax planning, it's really easy to prove the value. We do this. I save you or do your direct respondents this. It's really easy to prove the value. But hey, I'm just doing your normal CPA annual tax return. Well, where's the value in that? And this is why I think it's difficult. As a coach, I'm always having to, in the club, we're always having to prove, because we sell an intangible, prove that it works. Whereas accountants and CPAs have always been able to just step back and go, well, you need it, so you'll pay us. And this is where the problem comes, is when you're in that, well, you need it, so we'll pay us. So I looked with interest about the Intuit QuickBooks ad campaign that, should we say, didn't go down well with some of the tax preparers, and led to, should we say, some quite militant moves by people that I wouldn't normally class as militant. And that was a software company saying, ditch your accountant and tax preparer, use our software. And I think that this is kind of a bit of a, this is like the first shot across the bows, where the technology company is saying, if you don't get anything more than just the right number on your tax returns filed, then why are you going to your tax preparer? You just use the software. And I think we potentially as a profession need to forget about, we're just there for 1 time a year to do your taxes. We need to think about, what does value really mean? And I'm going to give you a small example. So Louis, where are you in the US?
Well, actually, I'm in Canada. I'm in Toronto. So,
Ah,
but most of our audience is split in North America. We have Canadian and U.S. audience. So,
yes.
uh,
And I've
it
realised by
works.
calling you American, I've just done the equivalent of insulting you. My apologies.
No,
I have
no, no,
family
no.
that are
Actually, that's
Canadians.
not true. That's not true. The Americans and the Canadians get along perfectly fine. We have a very good relationship. So no, I like going down there. It's one of
Yeah,
my
yeah.
favorite places to visit. So
Right.
no,
So as
no worries on my part. No,
yeah, so as
absolutely
you're
not.
in Toronto,
Yeah,
if I came to you in summer, so you could be 30 degrees, 90 degrees Celsius, and I said to you, Louis, get ready for the winter. Would you like to buy this pair of gloves? You look at me and go, nah. I probably couldn't even give them away to you.
right.
Now, if I said to you, Louis, these gloves are really thermal. Would you like to buy them off me? You might go, no, I've got enough pair of gloves. I'm fine. If, however, your car had just broken down, you're on
Yeah,
the way to visit a really important client. It's ice on the road, and I know with Canada, the snow plows are out every day. I happen to bump into you and sell you this pair of gloves. I suspect you're just going, oh, I'll buy it, whatever it takes. Just give me the gloves. And
right,
I wanted to tell this story for a number of reasons. The value is in the eye of the buyer, not the seller.
right.
It is context driven,
Correct.
and it changes over time.
Correct.
And so when we're going, how do we demonstrate value? We have to think about the client base, what it is that we're helping them with, whether it's peace of mind, whether it's cash, time, control, what is it we're actually doing with them? And then we can start to position the value. But the problem is, we don't really know who our end audience is, because very often we're going, I'll take anyone as long as you've got a tax return and a pulse. Well, it's very difficult to kind of go the value, because are you the sort of person that has everything online and you just need to press one button? You're going to be very, very hard to kind of say, you need me, or are you someone with really complex tax affairs? And I think we as accountants have got to get far better understanding who is our core audience. By the way, when I say accountants, I mean bookkeepers, CPAs, whatever title you want to give yourself, it's fine.
Yep.
We've got to really understand uh, who is our target audience. And we can't just go small, medium-sized enterprises, because that's not a target audience. We can't really go, anyone that needs a tax return, that's not a target audience. These are just like broad sways. Who
Right.
is it that you really serve? We in the Accountants Growth Club, we serve, accounting firm owners of different types that are looking
Sure.
to grow and scale their practice.
Yeah, that
And
makes
we know
sense.
who we serve and we know what they want. And
So,
so,
so Heather, I want to shift
sorry,
over on something else. No, no, it's okay. Because one of the things that I really liked about I read about is profit margins, because
yes,
everything you've talked about to this point, which is future ready, making sure you have the right team, putting the right processes in, picking the right customers. If you don't focus on profits first, right? And one of the numbers that I have here is 40% or higher. Why does an accounting firm have to be at least 40% or higher profit margins? Why is that critical? If you don't hit that 40% mark or higher, how does that impact your ability to get the practice you want?
And it's very interesting to take a number out of context. And that is a number that's been taken out of my book, and it's a number that's there. Now, when we think about how people normally measure profitability of a small accounting practice, they very often include in that 40% net profit, they don't include a commercial salary for themselves.
No, I do include that. So when I say
All right, okay.
40% profit, because I'm the owner,
Yes,
whatever comes to me is profit. Whether I take it out as a salary, because if there's no profit, I can't take a salary. Basically, that's the
yes,
way I work, right? So when I mean by 40%, I actually mean true 40%. So no, not taking away your, so 40% or higher that the owner has access to. Why is that so important?
and so it's interesting in the UK that most practices are actually valued up until you get to about $1 million are actually valued on gross recurring fees, a multiplier of gross recurring fees. So it's one of the only professions where we value a business based on revenue rather than EBITDA, which I think is fascinating. So the reality is whether it's 40%, 30%, 50%, 25%, it really doesn't matter where it is. But this has got to align with your goals. And so many people have started their practice so that they can build a lifestyle for themselves, whether now or whether a pension in the future. And
Right.
when you've got a reasonable bit of profit, whether that's the 40%, 30%, and regardless of how much of that profit includes your salary or doesn't include your salary, you've got more options. What do I mean by more options? You've got more options to bring someone in and still make a living while you wait for them to get to full capacity and to generate the more revenue for them, which you don't often have. But too often, in my experience, if you kind of gave the owner, who's often working 60, 70, 80, 90 hours a week, if you actually made the owner salaried, that business wouldn't be profitable at all. And I think the key thing here is to realize you're running a business. That means it's got to provide a living, not a salary for yourself. And too often not, we build a business that's around our personality. We're often the lowest paid in that business, work incredible amounts of hours. And apart from the fact that we choose when we work those hours, which is all the time, but just where we're going to work it all the time, um, it's important that you're getting something more out of this, because why not just go and be employed by one of the big practices?
Yeah. No, I agree. To be quite honest, I think the 40% margin is a starting point
Yeah.
in my book, because I didn't write a book, by the way, Heather. I meant like when I
And no,
coach and so
it
forth.
doesn't matter, Lou, if you read a book. You are a man who has got a lot of wisdom. Whether you put it into a virtual book or otherwise, or it's a turn of phrase, who cares? But you're
So
absolutely
so
right.
I 40%. I agree with you. If you're going to be in business and running a practice, which is much more difficult and much more challenging, and you have to at least make more, the same or more, and I mean the same is not good, but more than it would be if you were employed somewhere else. It doesn't make any sense to me to take on all that risk and responsibility if you're not making the same. I agree with that
And
completely.
I'm gonna throw a bit of to use a bit of a metaphor. I don't know whether it translates into Canada or US, but I'm going to throw a spanner in the works here. Is your profit margin is heavily dependent on A, the type of practice you're building, and B, the stage of where your practice is. So let's look at the hey, it's just me. And if it's just me, you've got a little bit maybe because you've got an office and you've got a little bit for software, but you can be getting 80%, 85%, maybe even
Correct. Yeah.
90% net profit. Then what happens is you bring on your first person. Now, typically that's admin support. It might be a very junior person. And knowing my dearly beloved accountants, it's normally someone on the cheap, the part-timer, the contractor, the
Yeah,
offshorer, the
you know the
outsourcer.
accounting industry very well, Heather. Absolutely.
So you get that in and your profit margin drops. At that point you remember, I now need to price because I've got an operation around me. So you need to put your prices up. If you don't put your prices up, your profit margin is never going to be at 80%, but it sinks like a stone. So you put your prices up. But what often happens is with those first few hires, until you get to in US dollars about 300 to 500 US dollars, you're probably at your lowest point in profitability, because you've got to get in that qualified, that big hitter that can actually take some of the client work off you. You have to lead the team, so you can't go all out on the big clients. And it is about that stage of where you're at, to whether you are hitting that 40-50%. But I would typically say when someone's got to, so I'd say £500,000, that's £1 million Canadian dollars, that's about 750 US dollars. I hope my exchange rates are right in my head that I'm calculating. What you'll actually find is that your profitability should have shifted up significantly more towards, and depending on how you run it, how you take the money out, whether got extra family members in the business, but
Sure.
you should be getting back towards that 40%.
Yeah. I agree. Like when you're self-employed, it's 100% goes to you because you're doing everything. So the
Yeah.
margin's always your margin's going to be way above 40%.
Yes. Yeah.
We're talking about an active firm that has
Yes.
anywhere from 3 to 5 employees, right? And probably between 1 to 200 customers, corporate customers. That's when things start to get complex. And that's when margins, I think the 40% should be your minimum base at that point once you get to
Yeah,
that
and
level.
I'd actually say 3 to 5 employees, you're going to be taking the profitability hit here, and it depends. Is your employee a part-time self-employed mum who's doing admin, or are they a fully qualified CPA? And there's a big difference between those.
Yeah. No,
And
no,
I
I
would
agree.
actually say that when you get your employees over five, that's the point. If your profit margin hasn't recovered and is on the way up to 40%, then you need to take a long hard look at what you're doing.
Right. Yep. We're pretty close on the numbers. I'm between 3 and 5, depending on the scope. You're at 5 and above.
Yeah.
Um, but that's fine. I mean, like I said, it's when you have a practice and when you're looking at growth, because you're going to keep adding people.
And
That level of 40% cannot dip. If you go to
yeah.
5 and then you go to 10 and now you're down to 20% or 10%.
And there's a couple of interesting things that happen around that transitional point. Is So I hire one person. The force of my personality is such to manage them. We're closer than a close thing. I hire two people. We're still close. A little bit of breakdown in communication, but the force of my personality. I get to three people, still pretty close, and then we start to struggle, because often I'm not used to managing people. Number one, often my business model is not right and I'm pricing too cheaply. So very often at this point, I'm working all the hours, I'm not getting any money out, I'm worried about cash flow. um, what can often happen is people then go on this hire someone, revenue goes up, hire someone, revenue goes up, hire someone, revenue goes up, but the profitability never shifts.
That's right.
um, and
Actually, I call that negative growth.
yes.
That's my term for that kind of top line growth is
Yeah.
called negative growth. That's what I call it.
And yeah, and it's interesting. And we've literally, and it can happen to anyone in our business. We will contract our top line by about 25% this year, but we'll expand, but our bottom up, we'll have our most profitable year pound for pound ever.
Right.
And I've just literally helped two practices, both at the US kind of $1 million level, right size their resource to where their revenue actually is. And people go, oh, were they unlucky? They lost a lot of clients. No, it's often we get slightly inefficient. There's poor management. We fall into the trap of people going, I'm busy, you need to hire. And you look at it and you go, no, we need to really see, are you doing the right stuff? Are you focusing on the right stuff? are our processes working for us? It goes back to those 4 key ingredients that we set off with: cash, time, process, systems, capacity. Those are the 4 things. And
Yeah,
very often
true.
we get caught up in this cult of growth because, you know what? My ego goes, Louis, I've got 20 employees. You know what? All that means is I've got a massive headache with my payroll each month. But very often it's a different skill to manage 4 to 5 people than it is to manage a business of 10 people. And often many practice owners don't make that jump and realize that you need a different structure. You need to have
Yeah.
different expectations. You need to be able to drive the strategy through multiple layers. As a result, you get a lot of practices that get literally stuck at 3 to 5 people and just can't move forward. And it often comes down to they run ragged, they don't have time to think, the profitability is not there, they're stuck for cash, they're trapped. And it comes back to the why should we be aiming for 40% profitability?
Yeah. So that's a nice circle that we just did. We went through the whole thing, and we're back to 40% is the key number. I like your 40% number. I think it's a good one for companies that are growing, that hit a certain level of size. As soon as your number one factor should be tracking your profit margins first. If your profit margins start to slip, I agree. Analyze first, because it could be a temporary slip based on staffing and repositioning, but it cannot permanently go down. I really like that. You know, Heather, this has been great. I think I have about 7 more questions to ask, but I think we ran out of time. If someone wants to get a hold of you or get a hold of your books, how can they do that?
Oh, absolutely. So, first thing is, it's really easy to get hold of me. Heather at heathertownsend.co.uk. I'm presuming they'll be in the show notes. The 2 books that most people are interested in: The Accountants Millionaires Club, which is your blueprint to basically growing and scaling your practice, Profitable Pricing for Accountants. You can buy them on Amazon, very easy. Even in the
Fantastic.
US or Canada, buy them on Amazon. They're there. But come and find me on LinkedIn. Connect with me on LinkedIn. You know, I'm linkedin.com/in/Heather Townsend. Very easy. But come and connect with
Fantastic.
me. I'd love to hear from you. You know, if you're thinking about what's the first stage I need to do, come and do our growth assessment. It'll give you that personalized report of exactly where do you need to start.
That is great. Well, thank you again, Heather. This was a lot of fun for me. I felt like I was you were preaching to the choir. By the way, everything you said, I was just nodding through the whole process, and I agree with it. So thank you so much for joining us today.
Well, thank you for asking me, Louie, and I'm sorry if I talk too much.
No, it was fantastic. Thanks, Heather. Heather, once again, thank you for joining us today. And to you, our valued viewers, thank you for tuning into this episode. If you haven't already done so, we kindly ask you to subscribe to our channel. And above all, please provide us with comments and feedback, as we appreciate them very much. Until next time, stay hydrated, always be curious, and above all, stay well.